We're not going to raise rates if we think it's going to tip the economy into a recession. We will raise rates because we believe the economy is strong enough that it is appropriate to have higher rates to meet the objectives we have been assigned by Congress.
My forecast is that the Fed funds rate goes to 50 basis points in September, latest October, first quarter of next year, probably March, April, we go to 75 basis points, and then second half of next year we could easily see a Fed funds rate between 1 and 1.25%. So the pace of which they're going to increase the Fed funds rate is going to be very slow, and the quantum is going to be very small. So it's going to be this very gradual process.
You can't ignore Janet Yellen and what she's saying. We still believe equities are the best asset class to invest in at the moment. You can't go into the bond market with the possibility of rate hikes looming. When it comes to global equities, remember we're still picking up a dividend yield of 3.5%. That's the alternative to cash, and that's what's driven the markets higher. Remember, we've got a lot of quantitative easing in the system. We've got a weaker euro. We've got lower oil prices that will also help earnings too.
I don't think the market is right to think that the first UK rate rise is far off into the future when you have a very data-dependent central bank in the UK, just as you do in the US.
Yes.
Both saying that they're looking at the labour market data, and the labour market data in the UK, if anything, is stronger than the labour market data in the US. You have acceleration of pay growth, you have unemployment. We've had one reduction in unemployment this year, rise in unemployment this week, but overall the pattern is for falling unemployment. I think that we could see a rate rise, not before the Fed, but we could see a rate rise in the UK sooner than people expect.
The issue is kind of who tightens first, Bank of England or the Fed. It's probably the Fed, but we think that it's probably going to be UK data that drives sterling strength as opposed to Bank of England testimony, even though that hasn't been the case this week. So I'm sure they're not welcoming sterling strength. You've got a European currency war underway. Everyone wants a weak currency, trying to sell goods into the Eurozone.